Thanks for coming down. This is our blockchain application panel. I think we're just going to start off and go just down the line, give some introductions of all the wonderful panelists we have here today. So maybe just start far and just come down and introduce yourself, maybe 3 minutes.
Hi, my name is Rayaan Arif, and I'm essentially an entrepreneur and a businessman. Involved in a number of different technologies, involved in real estate, smart cities, blockchain technology. Number of projects. My main project is I launched a real estate platform, which we started developing blockchain technology about 6 months ago. It's currently under development at the moment. We're using essentially blockchain to provide funding to commercial real estate projects.
Hey guys, I'm Yogesh. I founded a few blockchain companies. One was called SpankChain, and the other one is called LQDEX. For people who do not know what SpankChain is, it's exactly what you think it is. And LQDEX is a cryptocurrency exchange for cross-chain protocols. Yeah, that's about it.
My name's Jesse. I'm the founder of a digital marketing consultancy that was a startup. We took on a lot of small businesses, and now we're moving into the ICO and STO projects. And one of the projects that I took on was VerseVault. It's a blockchain platform for companies in the renewable energy sector. And what we do is we provide solutions from the government level to all the way to the technology, the infrastructure, and really helping third world countries to have access to power. And we do that through security token offering. And it's kind of like a partnership between my company and the company that I'm the CIO for.
Thank you. My name is Jules Hilliard. I'm the CEO of Secure Block Technologies. We are a team of enterprise IT and security professionals bringing blockchain to the marketplace. We've brought multiple technologies to the market over the years. Date myself going all the way back to the Hewlett-Packard corporate server days, where even multi-threading on RAM and high availability disk arrays were a new thing. And then, of course, moving into network infrastructure and providing layer 4 through 7 switching and routing, or load balancing, which is a very common term today, which it wasn't then. After spending about a decade in the ad tech space, came back into enterprise technology with blockchain becoming more relevant. We saw a big gap between the enterprise world, the corporate world, and the disruptors, the developers, or the companies that can actually use blockchain as a service or that can add value to their organization. So our goal is to build the bridge between the two. We've got a very strong cybersecurity team as well that's going to help these companies understand the benefits of blockchain, not only from a functional standpoint, from the fact that it can also augment the security of their environments. I think, as we all know, cybersecurity is, the end game is looking pretty poor right now, as we're going to spend about $100 billion this year trying to defend the data and the digital assets, and we're going to lose about $1 trillion worth of those assets. So it's currently not working. So hopefully we can build the bridge and utilize blockchain to augment the security practices that are out there.
Awesome, thank you. My name is Carter Harrison. I am the senior blockchain engineer at XYO Network, and the XYO Network is a startup located in downtown San Diego. And specifically what we're doing is we are providing IoT devices the ability to create data and to talk to smart contracts on any platform, whether it be Ethereum or EOS. And with that, you can do some pretty cool things, whether it's location data, temperature data. It's a decentralized data Oracle network, if you will. So I think we'll just open it up. And obviously blockchain, if you've been paying attention for the past few years, it's a very fast-paced industry. It's been changing every single day. Every day new news comes out. Where do you guys see it in 5 years, and how do you see it changing things? You.
All right, sounds good. I'm sorry. Again, you know, right now we're not that much in the early stage of the development of blockchain. It's much farther down the path than I think a lot of people realize. Again, due to the inherent capabilities of blockchain and the benefits that building applications in blockchain bring to the table, we haven't quite figured out how to close the gap between the development and the younger generations that are doing a fantastic job of helping the technology evolve, and the companies that actually need this technology. We've got to change the rules as it pertains to protecting our networks, protecting our data, and how our applications are going to, become functional. If you've been watching the news, you'll see that Walmart just announced that they've completed their supply chain management blockchain network that is in production. They're demanding initially that their produce providers get on that network before September, I think it's 2019. They were able to take a problem in supply chain. One of the biggest problems is there's a problem in the supply chain. You don't get your product, you can't sell your product. Everybody gets hurt down the supply chain. What was taking them 7 days to figure out what had happened in that instance is now taking them 2.2 seconds. So we are seeing the huge benefits that blockchain brings to the table, and we've got to stay focused on building the bridge between the development that's happening here and the need at the corporate level.
So one of the things that we've been looking at is how to use data inside the blockchain and the optimization of it. We're actually using artificial intelligence to go forward with that and using parallel algorithms. So like you said, cybersecurity is a big threat right now to companies, and they're not utilizing the encryption methods and the ledger itself. So a lot of companies need to convert to this. And then going forward with that is actually the data optimization and connecting to the data, allowing their teams, companies to all use the smart tracks efficiently so that they eliminate costs within their business. Having the access to the data and the blockchain is really important.
Okay, so let's do a quick poll. How many of you guys kind of understand blockchain, how it works and how it works internally? Okay. So the reason why I asked this is, so blockchain is really good at transferring value from A to B. So in 5 years' time, if we bet on the future of blockchain, there shouldn't be any banks, really. I mean, I'm not offending anyone, hopefully, but I think, so in 5 years' time, what I see is transfer of value can happen without any centralized entities. And to answer your question, initial question, I guess that's my answer.
I think, so first of all, 5 years trying to predict something with the kind of, the speed that technology moves at today, it's like, at my time, asking me what it's like 20 years from now. I mean, things are going to move dramatically over the 5 years. In terms of, where this is going, I think we're starting to see a lot of consolidation already taking place, particularly with different kinds of operating systems, different kinds of protocols, because that's been the challenge. Everybody's looking for, the best protocol that's out there, whether it's Ethereum, whether it's Bitcoin. So I think that once that clears, we're already starting to see some clarity. I think in 5 years' time, certainly we will see blockchain in almost anything that involves the internet. You're talking about whether it's smart cities or whether it's real estate. So there's a lot of applications, and I think that's what we're looking at to see how we can try and bring those applications forward. I mean, essentially the blockchain component is still a little bit misunderstood. As our friend here said, that essentially it's a way to transfer value, it's a way to store value, it's a way to do something smart with that transfer of value. So trying to figure out what that is our job as a use case, to try and look at existing processes and procedures and see how that could be applied to, and does it actually solve a problem? Does it make it faster, cheaper, better, less friction, and then we can start to embrace it.
Awesome, thank you. You guys mentioned and touched on like more corporate and more businesses getting involved with blockchains over the past year. Obviously, blockchain is a very public thing, whether you go fully public or fully private. Where do you see the biggest bottlenecks in terms of bigger companies and higher institutions getting involved with something that's very public and new?
All right, great. Well, that's right in our wheelhouse, actually. Yeah, there's a big gap between the two. I think I'll quote my CISO over here, Joel. We're all familiar with Android and Apple, right? You guys remember that journey when Apple was way over here and Android was way over there, and you had to choose a side. And right now, what's happening with blockchain, as the large corporations, the IBMs, EOS, HP, Arthur Corda, you know them, are spending their money, they're making it very monolithic, just like we've all seen before. So I think the goal to help build the bridge between what's happening today and the future, for example, as we all know, apps are capable of running on either platform on your phone. What our platform is designed to do is make it interoperable earlier on, so that we don't run into the same problems of adoption that we saw when it was segmented with our cell phones, for example. The faster that we can make every platform and protocol interoperable, the faster the corporations will start to adopt the technology. For any new technology to become successful, you need a couple of things to come into play. You've got to have the interest from the younger generation. They've got to see the value. They've got to do the development. We need that innovation. You've got to have the major players start spending a lot of money on the development as well, so it does mature to the enterprise level. But then you've got to see the adoption of the actual businesses start to use the technology. And when you get those three in sync, that's when we see great technologies like blockchain start playing a fundamental role in the changes that we think it can play in the world of IT as we know it.
Some of the biggest challenges with businesses is how to adapt blockchain into their business structure. I think a lot of businesses, they know it's important, blockchain is important, but they really don't know how to acquire the technology and use it for their business. And one way that you look at this is blockchain as a service that's tailored to people's needs. A lot of educational facilities want to use it to verify that people get degrees. There's a lot of fraud with that. Another way is in fintech, we saw with cryptocurrency, but you could actually put your know your customer information, the KYCs, into the blockchain. And there's different ways that you could do that, and people and businesses and top executives need to understand that there's faster ways to do that, and blockchain's really not as expensive as they think down the line. The short term might be a cost, but saving, the access to data from hackers and stuff like that is way worth investing in blockchain.
Cool. So to understand your question, is it the difference between public and private blockchains as applied to big companies?
Correct.
Okay. So let me make this a little more exciting. At least it's exciting for me. That is, public blockchains work because of economic incentive alignment. Meaning, I don't want to explain all how the blockchain works, but I think the reason there's no centralized entity is because any rational agent is mining. Let's take Bitcoin as an example, mining in order to get a Bitcoin. In the process is validating truthful transactions. That otherwise a centralized entity like banks would do. Like if I send you money, bank would validate the money is going from A to B, and it's signed by the right person, and the right person has the money, and it's going to the right person. So this entire thing is validated by miners. And that's why public blockchains are great, and it works because of the economic incentive alignment. But private blockchains, I personally think, my personal opinion, it's just a glorified database, nothing else. It doesn't have any economic incentive alignment there. That being said, big companies using public blockchains, applications on that really makes sense. I think big companies should just focus on building applications on public blockchains. That's my opinion.
So I think the corporate involvement, is, first of all, you have to look at the underlying, trend that's going on worldwide. there's definitely a lot of interest from some of the biggest corporations in the world, and that's what drives us, to look at, if JP Morgan, Goldman Sachs, IBM, Microsoft, those guys are all getting involved, then there must be something to it. But typically there are two reasons, or there's usually one reason for corporations to get involved. They're looking at technology to try and improve and do better and be the first at something. Something that's very new over the last 5 years is disruption. They're afraid of disruption. So for example, the banking system, whether they like this technology, they're afraid of it. And they're afraid that it's going to disrupt them in the same way as Uber disrupted the ride sharing. And so a lot of that involvement is a little bit, through fear. So the level of commitment is a little, controlled in the sense that they're not putting their money where their mouth is. The other thing that I see from a corporation point of view is that corporations typically used to have very expensive R&D departments. Well, today, the R&D departments is the global world itself, because innovators are doing this R&D for them. So they simply don't have to invest as much money into their own R&D, and they can simply go and buy one of these companies and buy these innovators. So that's another incentive for corporations to get involved.
Hello, my name is Dennis O'Neill, CEO of O'Neill Capital Advisors. Obviously at the end of the day, we're looking at a paramount change of how people do business. Obviously blockchain brings a lot to the table, faster, cheaper, more transparent, more secure. But as I was speaking with the head of Dell Capital yesterday, it's very, very detailed, and it's easier said than done to change these large organizations over to blockchain. So, there's paramount risks of disrupting what the current cash flow or the business model is today. So. What I'm seeing, I raise money institutionally for for cryptocurrencies and for ICOs, STOs, cryptocurrencies, is that it's much easier for the smaller guys to build on these platforms. I think what is ultimately going to be the tipping point or the end game here is that. When these larger corporations, whoever it ends up to be the leader in the space, ends up to have a huge competitive advantage because of utilizing blockchain, then you're going to see a gold rush of people going to convert to the same type of technologies. But there is a lot in the plumbing that people are not talking about. That is a lot more detailed than you would imagine. It's just not a plug-and-play type deal. And I think that there are people that are spending significant amounts of dollars to figure out exactly how to convert legacy systems into blockchain without interruptions, without some type of fatal flaw coming into the process which would interrupt their their business or their cash flow.
Thank you. I think you had another answer.
Yeah, a great point was brought up here as well. When you're moving from when you're a small organization and you're growing, you don't get hit with things like compliance or regulations. If you're a larger organization and you become publicly traded, those become even stronger, and the impact to your business is equally as important to make sure that you are compliant and that you are following all the proper regulations. To date, with everyone coming up with a blockchain as a service platform, what we've got to do is come up with a fundamental hybrid environment, which is what we've been working on, that allows a company to have a private blockchain environment to fall within those regulations and compliance requirements, but also give them access to the public blockchain environments that exist so that they can see the benefits from those as well.
Thank you. I think you touched on a good point about how bigger companies are constantly in fear of regulation. That's why smaller companies are usually the ones doing this. How do you think that, obviously public blockchains are immune to regulation in theory because they're completely decentralized, but obviously it stops bigger companies. How do you think that regulating bodies will regulate blockchain in the future, and how will that affect the space?
And that's the million-dollar question.
Right.
You know, that's the bridge that we're trying to build. You know, we come from this world. We are trying to figure it out, and we're an IBM partner, so we've been in these conversations of, again, how do we build a hybrid environment or have deployable servers that do fall within the compliance and regulation guidelines of today so that they can see the benefits that blockchain brings to the table. You know, I do feel we've made a lot of headway over the last year, and I think that we're going to start to see that effect Q1, Q2, Q3 of next year. And once we're able to prove, do our proof of concept, that we can make it functional, then we're going to see that gold rush that's going to be back in the website era. If you remember the website gold rush of yesterday, we're going to actually see that with blockchain applications tomorrow.
So as far as compliance goes, the SEC actually has FinHub that they started to work with blockchains, STOs and ICOs. I don't see probably 2 to 3 years from now that being a problem, because a lot of blockchain companies are actually going public via reverse merger. So there are opportunities out there. They're just specified, and you do have to do your homework and contact to the right people, get into the right networks, especially with lawyers and financial advisors. But it's the funding is there, and there's a lot of people interested in it, especially in fintech. But that's not the only solution that's out there. As far as compliance, blockchain is a ledger. So if you gave somebody the API and the SDK to get access to that information, say like a government body, they're able to look at it. It's kind of like a new form of auditing if you make it available to them.
Okay, I think this specific question can be answered. I'll answer this specific to my my exchange, cryptocurrency exchange that I have called LQDEX. The thing about regulations is exchanges, I need specific set of licenses, money transmission, cryptocurrency, wallet licenses. And also there's another level of regulation called KYC AML, which is users using the exchanges liquidating their Bitcoin, Litecoin, whatever, to their actual US dollars or back and forth. That has to be regulated by verifying the users, essentially. I would also say this. Any tokens that's there on ERC20 tokens, I'm sure I'm going deep into technical namings, but it's just, okay, to describe what tokens are another way of describing what shares are today. Tokens can be, I describe token as programmable money. If you can program money, you can program incentives, you can program human behavior. And that's what shares are pretty much of any equity or company essentially is. So at a high level, yes, for an exchange, regulations are a little more clearly defined compared to other compliances with other blockchain applications essentially. And yeah, that's about it.
Yes. So regulations actually is a much bigger subject in that is affecting this, the progress so far, because I think in the early days, a lot of what was done had to be undone because it was done a certain way, whether it was exchanges or what type of cryptos they were, what type of securities they were. Particularly, for example, in the ICO world, everybody raised money thinking this was a new way. Then the SEC came in and said, no, those are not valid, give the money back, and so on. So the regulations are incredibly important in the sense that we have to abide by them. There's no way around it. Until we get new bills passed, we have to work with that. So as innovators, one thing I always stress to anybody is don't try to build your idea or project based on, well, we're also talking to the SEC, and if they pass this law, then our technology is great. That, because you'll be waiting forever for that. And so always build something with existing regulations. You know, hate them, whatever you want to do, but accept them. And that principle is finally coming home true now with regards to securities. Digital securities are, you know, digital tokens are securities. So trying to go through the Howey test to say this is a utility function. If I do this and if I don't do this, then it won't be a security. You're just trying to skirt around the regulations. The regulations, you know, I don't personally like them. They've been around, you know, the same regulations since 1929. You know, they're outdated, but that's what it is. You know, it's a very, you know, cumbersome process to change that. And I think people should work with the regulators to try and change that. But build your technology as it stands today. Otherwise, you're going to waste a lot of investor capital, a lot of your time and energy, and get nowhere. A lot of people have already done that.
Yeah, I have a totally different take on this. I mean, as far as I'm concerned, the SEC has been grossly negligent in giving any type of guidance or policy on this subject. It seems as if that they are aligned directly with the large banks and the large investment banks, and their interest is, number one, is to protect those interests at all costs. And by creating as much uncertainty, fear, and doubt in the marketplace by giving minimal amounts of guidance or policy, it's creating a lot of uncertainty, and that uncertainty is pushing other jurisdictions to do a land grab on the space. I mean, you're starting to see small countries like Malta become the mecca for cryptocurrencies. Bermuda, Cayman, Liechtenstein, Switzerland has actually given more direction, and that they're issuing settled law, and France is doing the same. So unfortunately, I think we're in a situation to where that until that the SEC decides that they're going to support the biggest, fastest growing new market in the world today, opposed to giving it away to foreign markets, I think that we're going to be kind of stuck here in the U.S. I mean, the places that we're seeing, it's a flight to quality. We're seeing people that are getting significant amounts of funding, that have big names or have big names attached to them as far as funding sources or lead investors, and they believe that there's enough cover there to where that they have a lot less at risk or exposure to these hundreds of subpoenas that the SECs are putting out. So if you're a smaller ICO or STO, I would look seriously at raising money overseas. I know the one issue that we're going to end up with is that we're going to have multiple jurisdictions with multiple different types of laws, which will cloud, muddy the waters to a certain degree. But I think that as you sit today, if you're doing a smaller ICO or an STO, you're best to do it offshore, only because that for whatever reason, the SEC is not giving guidance. They're not giving policy. They're regulating through subpoenas. And if you're a small company and you get subpoenaed, you end up spending 90% of your time defending the subpoena and not growing your business. So, as far as I'm concerned, but we had the wild, wild west days to where that, insane valuations, insane amounts of money that were raised. Those days are over. Now it's now we're back to, I would say, reality, to where that management is first, second, and third as far as what institutional capital is looking at, and then we're looking at projects that are not the seed rounds, or maybe not even possibly the A rounds. They like to see how you've been able to raise at least a certain amount of money and how that money was deployed and executed. Did you spend all of it on marketing your ICO or STO, or did you actually spend that money actually building the business? And then valuation is always an issue, as well as that there's a litany of other things that come into play. But Unfortunately, in my mind, I see the U.S. market. I mean, it's just gross negligence to the highest level, not to be supporting the biggest, fastest growing new market in the world today, and that lies on the federal regulatory agencies.
Can I just add to that? I mean, I share your frustration. I agree with you, but at the end of the day, you know, and it's a fact. I mean, we travel all over the world, and it's a fact that we are falling behind on the technology curve. But you know, if we're based over here in the United States, and we plan to do business over here, we plan to develop our idea, our marketplace over here, then it can be a challenge trying to raise money overseas, because eventually you may fall foul of the SEC regulations. So, you know, and we understand countries like Estonia, Malta, all these different countries are being innovative. You know, we've traveled, we have people on our team based over there. But again, you know, I think we take the view that it really depends on where your business is going to be. If our business is going to be in Malta or some of the, you know, the countries that support, you know, similar regulations to Malta, then great. But if your business is over here, it is what it is. We have to accept it. But there are ways to fight the regulations over time. If you look at crowdfunding, you know, the Jobs Act was passed in 2012, and that made it possible for, you know, a lot of startup companies to raise money. That was done through legislation. That was done. So again, you know, in the end, some laws will be passed, some clarity will be provided. But at the moment, the SEC has always taken that position. They never actually provide clarity. They just tell you to follow the guidelines.
Can I add something to here? Because yes, Estonia is fantastic because it's cheap licenses we got for our exchange, and two is I had a Bitcoin lending platform. We got subpoenaed the hell out of. It's not just time; it's also money for lawyers. So yeah.
I would say that if you are getting into the cryptocurrency ICO space, that you should look closely at Southeast Asia and Singapore as well. And that when you actually set up the business, it should be focused towards a type of service that you offer, not just trying to make money through the financial technology aspect of the blockchain. Kind of separating the utility, you know, going into the securities and going into different applications that you could put with it and databases. So don't be so focused on that if you're from a developer side or a small business on that. You might want to focus on strategic partnerships with bigger corporations outside the United States.
And definitely a fantastic lesson there on ICOs and the SEC and, you know, how the cryptocurrency world is battling, you know, their regulations and trying to make it more readily available. And I'm in full agreement. In addition to that, going back to the question of the big corporations also adapting it as an application that they're going to use, a functional application, whether it be supply chain management or accounting or some other facet of their business where there's a value for blockchain, which there is. There are a different set of guidelines and regulations that corporations have to fall into when it comes to protecting consumer data, you know, protecting financial records. So the corporations aren't looking at it from the ICO perspective as much as they're looking at it from the regulations and compliance efforts they have to put into protecting their digital assets.
Yeah, thank you. Currently, the blockchain right now is all focused around cryptocurrency and things like value transfer, for example, exchanges. Do you think that blockchain will evolve in the near future to be able to utilize its immutability and whatnot to support other applications besides just value transfer? Currently right now, we have Bitcoin, Ethereum, and all of its biggest applications are centered around value transfer, whether it's party A sending money to party B or exchanging it for a new token or cryptocurrency. It's all very centered around the idea of value and transfer of parties with value. Yeah.
I think at the end of the day, I mean, this is all about utilization and usability of the actual coins themselves. I mean, there is going to be a significant amount of the blockchain that will have nothing to do with cryptocurrency in any way, shape, or form. It'll be a platform that'll be utilized for supply chain and things of that sort. But getting the adoption rates of having a usable coin or token in the marketplace itself, not just as a specialization tool, but as something that's usable, is going to be very, very important. I mean, the title of this is AI and blockchain, and obviously AI is going to be a big driver within this space, but the major issue with AI is that it's only as good as the data that it is scraping and capturing. So, I mean, I guess the next issue that we're going to be able to have to address is that how do you encapsulate good quality, clean data, either from a transaction perspective or from a reporting perspective that allows AI to leverage, you know, the blockchain and basically that's, I mean, everybody that I've been speaking to is grappling with that issue because, you know, obviously AI is only as good as the data that it's mining.
Yeah, I think, you know, in terms of uses of blockchain or this technology, I think it's only, you know, the only limitation is our imagination. It's, you know, it has endless possibilities, and I think those possibilities become real when you look at a situation. You say, okay, we're doing something here, and if you understand that technology, you know, a little bit, then you can start to see actually this would be much better if we actually put this on a distributed ledger, if we tied in, you know, IoT devices where data came straight into the ledger, got recorded, got hashed, and became immutable. So those are all different ways you could say, you know, that's another value add to the use of this technology. But really, at the end of the day, there are just, you know, the possibilities are endless. And every day, I think I have it down, and we tell our developers, hey, keep working at this. And then suddenly when they're talking to me about something else, I mean, just the other day in conversation with a group out of Wall Street that is involved in traditional trading, and they said, wouldn't it be great if the item that you put on the blockchain for that real estate transaction, that we had all the information pertaining to that asset, including rent rolls, including devices fitted inside the building, including lighting, fire alarms, and somebody's about to trade on this particular asset at Wall Street, and if you have the data in real time, wouldn't it be great to know that how that asset is really performing today, and maybe it's on fire right this second, and that could be fed in through, again, you know, IoT devices. So, you know, again, it really is down to, one, the imagination, secondly, trying to find enough funding and people to back you with an idea, because you have to test this out, you have to build, write the code, and then, you know, get partnerships with certain companies that will give you the opportunity to test this out on their systems.
So my viewpoint about your specific question about other applications of blockchain, things are not very clear. It's like 1998 when you're trying to think of building Dropbox when the internet speed is 56 kbps. So it's better to be more cautious and understand what's its capability, wait for scalability solutions before describing different applications which may or may not exist. So, I mean, the reason why I say that is you can imagine everything. I agree with you. We should do that. But also there is certain limitations that's never been gone out of. Like, for example, if you tell me I'm going to go faster than light, speed of light, no. When Wright brothers invented airplane, they saw birds flying, and they knew it is possible to measure the lift. So there's some things you have to evaluate based on fundamental questions of science. That's my viewpoint on it.
The advancements of blockchain has come a long way as well into marketing, the way we use content. So if you think of Steemit, before we had that, we had Medium. And when Steemit came out, you have consensus and delegation where content creators earn based on curation rewards. So that's one application that they had that's already out there. Then you have the app CryptoKitties that came out with Ethereum, and people started using that. So blockchain is really in every single industry, the healthcare, finance, like every type of industry it's impacting. It's all about, how he said, the limitations of our mind. So one of the ways that I really want to utilize it is with data virtualization. If you're able to use AR and VR with it from end-to-end encryption, from when you have access to, say, like virtual intellectual property, that could be a utilization of that. If you could design something, put it into the blockchain, and then only certain people have access to that type of information, it could be really sophisticated.
Also, coming from a cybersecurity perspective on this, right now, if you take a look at a large corporation and how they defend their digital assets, it's very similar to how it's been since the beginning of time. They call it the castle and moat theory. You put your firewalls out there, multiple level of devices, more people, and you lose that battle. They get inside the walls and you lose the digital assets. They can hang out in there. They can take your data when they want to. They can truly, it's very low risk and very high reward for hackers as it is today. Now picture you're a hacker and you break into the same castle and moat and you've got a decentralized blockchain environment. All of a sudden, your work is cut out for you. And it becomes very difficult to hide in there, especially with the improvements that are happening, the evolvement of blockchain, AI, the combination of the two. And even if you do or are able to sneak out small pieces of data of that environment, it's very low reward. So you got a lot of risk now. You're in there and everybody can see you and you can only take a little bit of pieces out at a time. And it's almost impossible to take it out without being noticed. So in the old risk-reward formula that we all use as business owners, hackers are doing the same thing. In the next couple of years, cybersecurity is going to generate more revenue than all of the illegal drug trade in the world combined. So you're better off being a hacker than you are being a drug dealer. So you can go hide in some third world country, get internet access, and take that information and run. Blockchain-enabled networks are going to stop that from happening. And the companies that do adopt it, and why the larger companies are doing it so aggressively, quietly, is because the hackers are going to go after the low-hanging fruit. They're going to know you're blockchain-enabled, and they're going to go pick on the companies that aren't. And I think when that starts to happen and those real losses start to get recognized, again, that's going to start the boom of adoption at the corporate level.
To touch base on cybersecurity that is going quietly under the radar, we actually are working on quantum-resistant blockchain and going away from semantic to asymmetric key encryption. So that's some of the advancements that we're having, whereas other companies are barely adopting to the blockchain. We're already going from one step to further, and then utilizing that with AI and separating the different types of databases.
I think it's kind of important for everybody to understand is that, I mean, we're at the beginning of the beginning of the beginning of the beginning. I mean, the penetration rates are like 1% on the investment world for blockchain. We're starting to see money being deployed I guess in a significant way with the larger corporations, but the deployment rate is almost zero. So I think that there will be an arms race at some point in time. I think that once that we start seeing some of these networks successfully deploy blockchain as as data management and cybersecurity and things of that sort, as well as being able to do transactions faster, cheaper, safer, more transparent, immutable ledgers. I think the gold rush is definitely coming, but there seems to be a lot of foreplay, for lack of a better word, that everybody seems to be talking about it, preparing for it, but the deployment rates have been very, very, very low. So, in my mind, I think that competition is everything. It drives everything. So once that we start seeing some real competitive advantages from the groups that have deployed the technology, and then there'll be a big catch-up game to where that I think that being in the pick and shovel business, as they say, is a good business to be in when a gold rush breaks out, and all the people that are going to be supporting these services of deploying blockchain, I think are going to be sitting in a very, very, very ideal and strong position.
Great, thank you. I think we only have about 2 minutes left of time. Just really quick, just maybe go over just the biggest bottlenecks that you guys see in the near future with blockchain technology.
I guess probably the biggest bottleneck so far, certainly from what we've been doing, has been regulations. And so we've, most of us have come to accept, what they are. I think the other bottleneck that I see in this is that, we really haven't tested these systems out fully. I mean, we're talking about, databases. If you look at the traditional databases, every code and every single formula, whichever way you splice it, whether it's, SQL or whether it's MongoDB or whatever, those databases have been running for 20, 30 years. Blockchain, and when we start talking about smart contracts and the code people write, I mean, we really haven't, put it through any aggressive manner yet. So that's where I see a lot of bottlenecks when people try and put more and more of those types of code and contracts and different ways of doing things. That's when we're going to start to see problems around that area. But we have to go through that.
Yeah, so what I think is blockchain is a huge experiment, and we are building huge experimental applications on top of it. This is my ideal view of what blockchain is. So to add to a raise point, actually, yeah, I raised money through an ICO. We wrote a very advanced smart contract for auction. There was $10 million stuck in a smart contract, and we were trying to get the money to a wallet. And as I said, the code has been not tested well. We were not prepared well. We had to spend a week without sleeping testing it on a 4th chain. So that's one thing. Adoption will be the key. Scalability is the bottleneck as well. And UI, UX sucks for all blockchain applications at this time. So these are things that needs to be fixed quicker in order for experiment to be really true.
Thank you. I think we're sadly out of time. Thank our great panelists today. And thank you.